Hey there, investors! Are you tired of the same old boring investments? Do you want to make money every single month no matter what the market does? Then listen up, because I'm about to let you in on a little secret called cash-secured puts. Cash-secured puts are like magic. They let you generate income by selling insurance on stocks. Think of it like this: you're getting paid to take on the risk that someone else doesn't want. And the best part? You get to choose your price. Now I know what you're thinking. Jim, this sounds too good to be true. What's the catch? Well, like any investment, there are risks involved. But with a little bit of knowledge and a whole lot of moxie, you can use cash-secured puts to supercharge your portfolio and start raking in the dough. So, are you ready to unlock the power of cash-secured puts? Let's dive in. Alright, let's break down how these cash-secured puts actually work. It's simpler than you might think. First, you pick a stock or ETF that you wouldn't mind owning. This is important because you might have to buy it at a discount. Then, you sell a put option on that stock. This gives the buyer the right, but not the obligation, to sell you those shares at a certain price, the strike price, before a certain date, the expiration date. In exchange for selling this put option, you receive a premium. This is pure profit that gets deposited right into your account. If the stock price stays above the strike price, congratulations. You keep the premium, and you get to sell another put option the next month. But what if the stock price drops below the strike price? Don't panic. You might be assigned the shares, meaning you have to buy them at the strike price. But remember, you already chose a stock you liked, and you're buying it at a discount. Now that you understand the mechanics, let's talk about why cash-secured puts are so awesome. First and foremost, they generate regular income. Every month, you collect premiums like clockwork. This steady stream of cash can help you reach your financial goals faster, whether it's early retirement, paying off debt, or just having more money to play with. Second, cash-secured puts give you the opportunity to buy stocks at a discount. If the stock price drops and you're assigned, you're essentially buying those shares on sale. Who doesn't love a good bargain? Finally, selling cash-secured puts can actually reduce your risk compared to simply buying and holding stocks. That's because the premiums you collect provide a cushion against potential losses. It's like having a safety net for your investments. Okay, I know I've been singing the praises of cash-secured puts, but it's important to be aware of the risks too. Remember, there's no such thing as a free lunch on Wall Street. The biggest risk with cash-secured puts is market volatility. If the stock market takes a nosedive, the value of your puts could decrease, and you could lose money. That's why it's crucial to only sell puts on stocks you're comfortable owning, and to have a plan in place for managing your risk. Another risk is the potential for significant losses. While the maximum loss on a cash-secured put is limited, it can still be substantial. Make sure you understand the potential downside before selling any puts. Finally, remember that selling cash-secured puts ties up your capital. You need to have enough cash in your account to cover the potential purchase of the shares if you're assigned. So you're ready to start selling cash-secured puts, but you're not sure which stocks or ETFs to choose? Don't worry, I've got you covered. When it comes to cash-secured puts, you want to look for stocks or ETFs that are financially sound. Choose companies with strong balance sheets and a history of profitability. Relatively stable. Look for stocks with low volatility and a history of paying dividends. Trading at a fair value. Don't overpay for stocks, even if you're bullish on their long-term prospects. Here are a few ETFs that fit the bill. SPY, the Spider, S&P 500 ETF tracks the S&P 500 index, providing broad market exposure. QQQ, the Invesco QQQ Trust, tracks the Nasdaq 100 index, focusing on large-cap technology stocks. DIA, the Spider Dow Jones Industrial Average ETF, tracks the Dow Jones Industrial Average, representing 30 blue-chip companies. And here are a few individual stocks that could be good candidates. Apple, ticker symbol AAPL, a technology giant with a strong track record of innovation and profitability. Johnson & Johnson, ticker symbol JNJ, a healthcare behemoth with a diversified product portfolio and a history of paying dividends. Coca-Cola, ticker symbol KO, a beverage giant with a global brand and a long history of paying dividends. Remember, this is just a starting point. Do your own research and choose investments that align with your risk tolerance and investment goals. Section 6. Real-world examples, cash-secured puts in action. Let's bring this to life with some real-world examples. Imagine you're bullish on Apple, but you think the stock might pull back in the short term. You could sell a cash-secured put option with a strike price below the current market price. If Apple stays above the strike price, you keep the premium as profit. If it drops below, you buy Apple at a discount. Or let's say you're looking for some steady income from the financial sector. You could sell a cash-secured put option on JPMorgan Chase. As long as JPMorgan Chase stays above the strike price, you collect your premium every month. If it dips below, you own shares of a blue-chip bank at a bargain price. These are just a couple of examples of how cash-secured puts can be used to generate income and potentially buy stocks at a discount. The possibilities are endless. Section 7, Cash-Secured Puts versus Covered Calls, which is right for you. Now you might be thinking, Jim, this sounds a lot like covered calls. What's the difference? Well, you're right. Both strategies involve options and can generate income, but there are some key differences. Cash-secured puts are bearish to neutral strategies. You're selling the right for someone else to put shares to you, hoping the price will stay above the strike price. Covered calls, on the other hand, are bullish to neutral. You're selling the right for someone else to buy shares from you, hoping the price will stay below the strike price. So, which strategy is right for you? It depends on your market outlook and your risk tolerance. If you're bearish or neutral on a stock and want to potentially buy it at a discount, cash-secured puts might be the way to go. If you're bullish or neutral and are willing to sell your shares at a certain price, covered calls might be a better fit. Section 8, Getting Started with Cash-Secured Puts Tips for Beginners. Ready to jump into the exciting world of cash-secured puts? Here are some tips for beginners. Start small. Don't bet the farm on your first trade. Begin with a small amount of capital and gradually increase your position size as you gain experience. Choose your stocks wisely. Focus on financially sound companies with a history of stable earnings and dividend payments. Manage your risk. Don't get greedy. Set stop-loss orders to limit your potential losses and avoid putting all your eggs in one basket. Do your homework. Understand the ins and outs of options trading before you risk real money. Read books, take online courses, and practice with a paper trading account. Consult a financial advisor. If you're unsure about anything, don't hesitate to seek professional advice from a qualified financial advisor. Section 9. Conclusion. Unlock your financial freedom with cash-secured puts. There you have it, folks. Cash-secured puts are a powerful tool that can help you generate monthly income, buy stocks at a discount, and potentially reduce your risk. While there are risks involved, with careful planning and a little bit of moxie, you can use this strategy to supercharge your portfolio and achieve your financial dreams. Remember, knowledge is power. The more you learn about cash-secured puts and other investment strategies, the better equipped you'll be to navigate the markets and achieve your financial goals. So, what are you waiting for? Start learning today and unlock your financial freedom.